please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets as well, they have opened up in the positive terrain early this morning. The Japanese index, the last time I checked, was up close to around 0.4%.
Overall, it's going to be interesting to see what exactly the board decides, and this will be based on the recommendations of the EAC or the Expert Advisory Committee.
The market starts to close at the lows for 2 or 3 days. I think that will be the sign. Till that sign is not there, even if you're a reluctant buyer, your basic instinct has to be buy on dip.
Recovery roughly in a quarter if you've seen 222 cross in Q3 and 239 cross in Q4.
It's a third of a percent higher on the Sensex and the Nifty, 10,775. That's where the markets have opened.
For the current financial year, we are not expecting more than 1,100 to 1,200 crores of total slippage.
India is one of the growth markets when it comes to Walmart. In fact, as far as the e-commerce opportunity is concerned, they admit and acknowledge the fact that it is currently small, but they do believe that it is compelling and see a significant upside.
That makes 5 public sector bankers, 1 person from the private sector. Quite a surprise candidate who has been invited is Ashish Gupta of Credit Suisse.
The market is pretty much at the low point of the day, but it's not the frontline indices which is the real worry. The worry comes in from the mid-cap index.
Okay, so once again, large caps are fine. There's been some issue with the mid caps. On the large caps, of course, dips are being bought, but in the mid caps, the advanced decline is worsening as we speak. 1:3 now on advanced decline. This is Closing Bell. I'm Anuj, with me Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. I was just taking a look at it, and we're back exactly to that same level, right? 10,783.84, which is where we were finding it difficult to sort of sustain or go above that zone. That takes us back to February. I mean, that's the top of this current rally. Do you get the sense that, that there could be a breakout, or the fact that the market is getting sluggish maybe indicates otherwise? Surabhi,
we are looking at the wrong index. Frankly, remember yesterday also we made this point that the market is giving you, some warning signs again about mid caps. Focus on that. That was the call this morning as well, that there is some bit of problem that this market is now sensing about mid caps. Large caps are fine. And Nifty and Bank Nifty are seeing buying, of course, at lower level. I think the way the Bank Nifty is recovering from the intraday low and now making highs of the day, and the way HDFC Bank is rallying, this is remarkable. So I think a last hour move on the Bank Nifty is now looking possible, courtesy that big move in HDFC Bank, the way that one is moving. So you are right now again going through that phase where money is moving from mid caps and small caps to large caps. Now, is this an indication that once again, just like 2 weeks back, the first correction happened in mid caps, then large caps fell? Is that going to happen, or is this just again the market positioning? Whatever it is, the market's message is loud and clear. Be in large caps. I mean, just take a look at what's happened to stocks like Federal Bank and Indian Bank. Right. Remember, despite bad results, Axis had rallied, ICICI Bank had rallied. In large cap, that comfort is there. In the mid caps, you miss the numbers, and this kind of result awaits you. So just to cut a long story short, I think nothing wrong with the large caps. There's still buy on dips, which still prevails today. Also, if you bought the dips, you have made money.
Absolutely, and we have some very important earnings still to come. So let's see, we'll probably get those numbers over the next 1 hour. Let's kick off with the headlines on Closing Bell.
Hey, how should you position yourself in this last hour of trade? As we speak, HDFC Bank is making a move towards 2,000. It's a strong move on that stock. Now, just pull out the intraday chart of that one, 1998 now. The last 30 minutes have squarely belonged to this particular stock from 1990 to 2000 on that. And that's enough to propel the Bank Nifty to the high point of the day. Ashwani and Mitesh with us, of course. Good afternoon. Ashwani, once again, the market negating a lot of negatives and absorbing a lot of selling. Your thoughts on last hour and stock calls?
See, I won't say it's as much the Nifty. Nifty is sideways. Lot of large stocks are down as well. The metals, if you see, they are down. It's basically these 4 stocks, IndusInd Bank, HDFC Bank, Kotak, and you can say to some extent ICICI, which are holding up the Bank Nifty. And all day, the bears tried to hammer them, but were unsuccessful. And now you will see a short covering on the other side where Bank Nifty could even hit, fresh highs, as in fresh intermediate highs. But other than that, if you see mid-cap, Nifty maybe a Reliance, you can say, is kind of moving up. But, IT is moving on the other side, which is, very inexplicable, because the oil marketing stocks are moving higher. So market is kind of all over the place. The clean trend is possibly only in banking. So that's what you do for the last hour. As far as individual stocks are concerned, I think Kotak is a buy with a stop of 1245, target of 1290. IndusInd Bank is a buy with a stop of 1885, target of 1940. And ICICI Lombard is a buy with a stop of 755, target of 780.
Okay, so sticking to financials, that's Ashwani's call. I totally take your point, Ashwani. Otherwise, it's so muddled. I think it's only some of these big banks where we are seeing consistent buying. Mitesh, what is your reading? Is it a glass half full or half empty? And trading ideas?
Yeah, I think it's neither. I think, good afternoon. I think very clearly it's a day, which is not showing you clear trends, barring, as Ashwani highlighted, a couple of banking names. That apart, I think, the other index contributors which look good on the chart, I think Bharti Airtel is showing promise, ONGC looks good, that's one of my trading calls. So it's a market which is slightly positively biased, but because the breadth is missing, and I think, there's some kind of supply around this 10,760, 780 zone, and there's some reluctance for the market to get past it. I think it's not a market you would want to be aggressively long upon, but yes, we are trading still with more of long bias. I have two calls right now, one buy and a sell. ONGC, as I mentioned, is a buy, keep a stop at 183, look for a 198 kind of a target, while NTPC has had some kind of a price and volume breakdown today. So keep a stop at 171.5, look for declines to about 163 levels.
Okay, fair enough. The one stock which hasn't recovered at all today is Federal, of course. Still down about 12%. Prakash Diwan is with us. Prakash, good afternoon. Easily a stock of the day today, Federal Bank. I don't recall when was last time Federal Bank was the biggest drag on the Bank Nifty, but it is today. Your thoughts on how to approach the stock?
So, Anuj, I think, this new norms, the recognition of bad loans has definitely impacted most of these smaller banks in a very significant way. You look at even Indian bank numbers, Federal Bank yesterday. So my sense is that people will have to be slightly more charitable to give them that benefit of doubt, saying things will improve here on, and whether this round of kitchen sinking is good enough to kind of put an end to it. I would believe that Federal the texture looks very weak from the numbers. What I could make out is that it may not be, just the fact that they've had a significant bump up in the provisioning that's caused this, but the deterioration of the quality of book is, of course, something that you can't put an end to just by one quarter numbers. So there could be some more pain left. And if it slips below this 87, 88 kind of zone, then probably, you'll have a lot of selling coming in, and then people will kind of give up. So I would not be in a rush to buy it, though I do like the overall performance of the bank, given its size and the scale that it can expand to with its branch expansion. But give it some time. It's not on a buying mode at this point in time, in spite of these howler of a number.
Okay, yeah, well, we've got two howlers in banking today. I'll come back to the other one, Indian Bank, in just a minute. But Anuj, just your thoughts on some of the OMC stocks as well. I mean, some of them are actually in positive territory, pretty close to the day's high when the market was so weak, and there is no, positive sentiment at all. Whatever is happening has been happening negatively for them.
Yeah, I'm glad you asked this because actually HPCL was our stock to watch this morning on the positive side, and which was counterintuitive. But look, there's an issue here. The issue is that the market now knows that this crude at 77, 78 and prices have not been revised for the last 14, 15 days. And I think it's been fully priced in now. Also, marketing margin is not the only issue. There's inventory gain, there's the upstream business, especially for a stock like HPCL, even for BPCL, but HPCL more importantly. So there's that issue. And then, if you go by the template of what happened post the Gujarat elections, you had a similar trend play out.
There was a rally post.
There was a rally post because for 15, 16 days, till Gujarat elections, there was no hike. And after that, see, instead of hiking 5 or 6 paise a day, the hike can be 12 or 13 paise a day. And, it will take care of, okay, it will take care of the overall move in 20 days. Also, the sense you get is post the results, and now with crude consistently above 75, I think some decision will be made on excise as well. That's my sense. So, I think it all boils down to risk reward. I think the stocks for the last 2 or 3 days had shown that, they have absorbed a lot of bad news and are willing to move on.
Oh, absolutely. In fact, let's just go back to maybe a 6-month chart on some of these stocks, and that's the point. Prakash, let me throw this to you. The only problem is that, as Anuj is pointing out, yes, there have been tremendous trading rallies, particularly after some of the state elections, but every time they get sold into, so it doesn't last beyond week 10 days thereabouts, and the stocks keep making lows. So would OMCs be a good trade right now for you at all? I don't know about investment or portfolio positioning, but what's the thought here?
No, not at all, Survi. So what carrying forward what Anuj was talking about. So once the decision making on the price hike comes in and it captures the backlog of sorts, and if there's no positive decision on excise, then it's very difficult for these companies to continue keeping that run rate which we saw last year. And without any positive cash flows at their disposal, a lot of their other projects, particularly on the upstream side, start getting hampered. So there's no development that you could expect. And with crude at these elevated levels, I don't see that to come down in a hurry. So it's going to be a challenge. So I don't think people should be looking at adding on to OMCs at this point in time. In fact, it's only the upstream companies that probably offer a little bit of hope and promise if you had to play that sector. But irrespective of what happens post 14th, I don't think there'll be any hurry to kind of add on to these names.
Okay, let's pull out the intraday of PC Jewellers.
I knew that.
Yeah, I mean, of course.
Someone's speculating about the outcome of that board meeting. Does this buyback price, Anuj, I'm guessing?
Yeah, it does. You remember, Surabhi, there was this movie by, Triple X, of course, starring, Vin Diesel. The guy's name, of course, is Xander Cage. And, he asked the CIA chief asked him, if I tell you not to jump off the Empire building, what will you do? He said, I'll take a shoot and you'll jump from there.
Off.
So, you tell people, don't dabble into PC Jewellers. I think that's what they'll do. But, of course, being the top traded counter for some time now, but ahead of that meeting, there is quite a bit of volatility.
Stock, by the way, that sold off today quite a bit of strides, Shasun, after the announcement yesterday about that Australia business merger. Today's been a very weak day. It's the day is low now, 7% down on that stock. Sandeep Wagle is with us, so let's get some more trading ideas going. Good afternoon, Sandeep. What are you working with?
Afternoon, so with a buy in a ONGC, stop loss of 185, target of 198, and a sell in a SRF, stop loss 2280, target 2160.
Okay, Sandeep, thanks a lot for those trading ideas. Prakash, thoughts on Titan, how to approach it ahead of numbers?
So, interesting space that is evolving into, Anuj. Look at what's happening in terms of the presence of most of the larger branded players, whether it's a PCJ or whether it's a TBZ, even some of the smaller players like Tangamil. I think that space is kind of evolving. Some of the smaller players like Tangamil. I think that space is kind of evolving very quickly, rapidly to benefit Titan in terms of a build-up in market share. Now, if Titan were to expand their product range, particularly at various price points, there are certain gaps within their offering currently, because they're probably poised more towards the higher end of the market. They could probably start looking at this as an opportunity where the opposition is blinking or the competition is blinking, and that might start paving the way for a re-rating for the stock in terms of future growth. Because these numbers, today's numbers which are expected, could probably not be very great in terms of top line growth. They could probably have some decent margin improvement, but that's kind of getting priced into the market, but in the price. But my sense is post the numbers will become a very interesting play once the management also echoes this kind of a focused growth plan going forward, because people are more concerned with what happens to Titan in the next 2-3 years, what's the reinvention that it could kind of talk about. So I would look at those qualitative factors more than anything else from its earnings now onwards.
Speaking of earnings,
but the view is positive for sure. That's in just to kind of conclude.
Okay, fair enough. So, but let's see what they deliver. But speaking for earnings, Prakash, now what about Indian Bank? This one was supposed to be among the best of the lot. Well, this whole asset quality issue that we've seen with the stock obviously tumbled after the earnings. What would you do with it?
Yeah, so I mean, it is worrisome. It is worrisome. But if you were to be a little bit brave enough to buy into any of these PSU banks, these are the only few ones that make the grade. Indian Bank has always been recognized as one of the first few to have started the cleanup act. But you know, the concern here is that the gross NPA percentage and the net NPA 60 basis point, 50 basis point is significant in an environment where it's already at an elevated zone on a YOY basis. So I think the worrisome part is whether this recognition is going to continue being a big drag for most of these banks, and they will keep on setting aside, provisioning aside a lot of money to set off these NPA growth. So that could be an issue with most of these banks. But if Indian Bank were to kind of come up with the explanation on why this is happening and what they expect going forward, that could mitigate some of the risk. But you've seen 20-21 bucks already off from its highs today, and that does tell us that the market is probably not in a very charitable mood at this point in time, whether it's Federal Bank or whether it's Indian Bank. So this would continue to be on the side for some more time. Nobody is looking at it unless there's some very distinct trigger to re-rate these or to get these out of the woods.
Okay, just pull out United Spirits once again, and consistently last 3-4 days now, there's been aggressive selling. Of course, there's been an issue of I think Vijay Mallya selling some stock or something like that. But it's been a big decline over the last 3 or 4 days, and today also in the morning it had a big rally, and that's been sold into. Prakash, your thoughts on this one? Severe derating right now.
Yeah, Anuj, but you know, if you ask me whether this has got anything to do with their operations and the kind of sales growth, the achievement of all the milestones that the company has been talking about for a fairly long time now, the answer is no. So this seems to be more of an overhang in terms of what the legal battle. Where does the legal battle take Mr. Mallya and his fortunes? In terms of impacting this company. But if you see operationally the way the Radico numbers look, or some of the other companies like GM Breweries, Globus, I mean, all of them have very clearly indicated that consumption within this identified pocket also is fairly strong. And remember one thing, the fact that their input side has not materially become unfavorable means that they still have pricing power with them, and that means that they could probably bounce back. So I'm quite positive on it from a longer term perspective, and I would buy into these dips whenever you get on the basis of some news flow.
Okay, Prakash, stay on. We will have some more questions for you. Nitin Spinner's numbers on the screen, nothing great. Net profit down 7%, but then it's a small base. Revenue also not doing anything. Dhananjay Sinha, MK Global Financial, is with us now. Dhananjay, good afternoon. So,
good afternoon.
Macro worries versus micro tailwinds. Your thoughts on how we are positioned right now?
So I think you're right. I think the way we are basically looking at is that some of the tailwinds that we have had with respect to interest rate scenario, liquidity, currency, and the oil prices, those have actually turned adverse. So we have seen the 10-year yield, for instance, on GSEC has actually increased to close to a little less than 8%, and you have seen currency actually getting into a sort of a correction mode. And we believe that both yields and the currency is still some way to go. So our expectation is that possibly 10-year fair value, which is about 8% for us, can actually be exceeding that, and rupee can actually depreciate to 6-7-70 levels. So there is a certain amount of disquiet with respect to financial market, and the stability that we have seen up till now can actually be somewhat disturbed. So that is one. And the third, of course, with the rising crude prices, I think it has got implication both for the fiscal scenario and also for the external balances. And we are of the view that the current account deficit could exceed 2.5% of the GDP, and trade deficit closer to 6%, and hence I think that that will have a impact for the fiscal deficit also, because you can see subsidy rising for kerosene and LPG. It will also have an impact on the way the government is trying to put its disinvestment targets, how it will be achieved. So there is an implication for that. And also, I would say there is some rollback on excise duty because of the rising crude prices. So there is a sort of a compromise as far as excise duty collection is concerned. So I think these worries are there. But at the same time, the rising commodity prices also has translated into better sales growth of companies. So if you look at the non-finance companies, the sales growth up till now has hovered around 10 to 11%. That could go up. So there is some momentum as far as demand scenario is concerned. We'll have to see whether that sort of filters down into profit growth for companies or not in the context of rising commodity prices. We'll have to see, but with a lag, I guess the margin pressure would also come around. Hence, we believe that the earnings growth for Nifty or Sensex companies, I think, looks to be in the range of 10 to 12% in the foreseeable future is what we are looking at.
Dhananjay, the other obviously factor that the market is now dealing with is Karnataka. Now,
yes.
Sometimes we hear commentary that elections don't really matter and the market moves on in a matter of days. But is Karnataka different? I mean, if there is an adverse verdict here, could it be really damaging to sentiment?
So I think the way I look at it is that from a policy perspective, I think it doesn't matter, because I think the kind of policy emphasis that this government has had in the last 4 years have been virtually the same as the previous government. So there is a considerable focus on the welfare schemes of the previous governments. There has been furthermore momentum that has been added. For instance, Narega, focus on farm sector, rural sector, etc. Housing for all these things are there. Power for all. So those kind of welfare scheme is there. So I think schemes are there. So it's kind of sort of a different level of similar stuff. So I think from a policy standpoint, it doesn't matter much. But I think from a flow standpoint, it does certainly it certainly matters, because important thing to note is that in the last 4 years, our markets have been run very strongly on the back of retail participation. So you've seen positive mutual fund flows since the Modi government came to power. Prior to that, for almost like 6 years, there were virtually outflow redemption every month. So I think from a market standpoint, the election outcome will definitely be of relevance. I think Karnataka election will tell us whether the key issues with respect to farm sector, employment, etc. So are those things are those things really mattering to electorates or not, or whether the electorates are still very gung-ho about the prospects under the current government. So that is something that will be outlined in this election. There is some takeaways from Gujarat election as well, where I think in the rural areas the BJP government did not do so well. So we'll have to see that, because going forward it could actually create a leading indicator for what could happen in Rajasthan, Madhya Pradesh and other major states in the north, which are predominantly rural and agrarian as well. So I think the verdict in this election, in the Karnataka state election, will be very critical from a flow standpoint, because I think the retail investors have somehow shown a very marked positive sentiment associated with this government. So that's how I think I would consider from a market standpoint this election is relevant.
Okay, just pull out the intraday chart of TI Finance. We normally don't talk about it, of course, as the erstwhile Tube investment, but it looked like the earning of the day today so far, and that stock right now making high of the day. That's TI Financial Holding, of course, the erstwhile Tube investment. There was a post-result, there was this uptick, then some profit taking, but now fresh round of buying emerging on that stock. So interesting. Dhananjay, in your strategy report, you mentioned you're positive on select corporate-facing banks. Would that include ICICI, or would Axis be a preferred pick?
So if you look at the banking sector, I think good thing is that you have a positive momentum as far as credit growth is concerned. If you look at barring the penultimate fortnight of March, I think the credit growth has recovered to something like 11.5%. That's compared to, let's say, 5% a year back. So there is a sort of a momentum that is there. I think an incremental growth is largely coming from retail lending. We think that this year this momentum should continue. We are looking at a systemic loan growth of about 15 to 16%, and I think some of the so you have this whole retail banks who have actually been doing well in terms of performance, especially those banks who have the growth capital. We think that some of the corporate lenders who have been aggressively moving towards the retail lending, including banks like ICICI Bank, look to be in a scenario where they will actually do well in terms of overall growth on the back of rising credit growth. And I think the management of ICICI Bank sounded pretty positive with respect to the outlook on growth, and they definitely have a reasonably strong growth capital. Tier 1 capital is fairly high, even if we consider stressed asset and take an aggressive haircut out there. So I think the guidance with respect to growth, profitability, credit costs, etc., look to be positive. So I think for some of these banks, there is a turnaround as far as profitability, etc., is concerned. So I think one can consider those as value picks. Yeah.
Okay, well, as the ticker is alerting us right now, IOC, look at the sharp move in these stocks, and this is what we've been discussing on the show earlier as well. So let's pull out IOC, BPCL, HPCL, anyway these stocks have been soaring. Dhananjay, we were just discussing what could be the possibility here. I mean, one is that Anuj was pointing out that, maybe after the Karnataka elections, then maybe we start seeing some aggressive price increases, and maybe that is what traders are playing right now. How do you account for these kind of moves in OMCs at current prices, and what's your call on this space?
So for the oil marketing companies, we have been skeptical. I think the prices have corrected largely in the context of rising crude prices and the worries that the free market-linked price mechanism will be disturbed, and I think that is what has happened. I think in the context of series of state and central government elections that are lined up, I think that worry will still be there. So I think as crude has shown evidence of being high on the rising side, I think more of these concerns will be there. So while in the market people believe that after a steep correction that we've seen over the last 1 year or so, there is value out there, I would sort of refrain from getting too gung-ho about it. I think we'll look at this sector maybe after the general election. So I think uncertainty is definitely there, and unless you are looking at let's say 3-year view or beyond, I think, or 2 years view or beyond is I would want to wait for some more time for better valuation.
Okay, Dhananjay, we leave it there. Thanks a lot for joining us today.
Thank you.
That's the view from MK. By the way, just as we approach 3 p.m., there's a bit of a decline that's taken place on the Bank Nifty. 26,175 is what we have. So been all over the place. Let's just pull out HDFC Bank intraday. The consensus was for expiry between 26,150 to 26,200. So far, it's being respected. In fact, as we speak, this fresh decline that's now taking place, 26,165 is what we have. Let's just see, that's HDFC Bank. Perhaps ICICI Bank would be interesting as well.
ICICI is, close to the flat line, still slight green tick, but yeah, not doing too much for the moment.
Not doing too much for the moment, yes. Yes, but it surprises you. The Bank Nifty is now once again almost at the low point. The Nifty as well, 10,715 is what we have, really all over the place. Of course, the Midcap, 300 points down now on the index itself, an advanced decline at about 1:3.